Iran is facing one of the deepest currency shocks in its modern economic history. In markets across Tehran, Shiraz, Isfahan, Mashhad, and dozens of provincial towns, the value of the Iranian rial has collapsed to unprecedented levels, plunging past 1.2 million rials per US dollar on the free market. This sharp fall has not only shaken financial stability, but also triggered a wave of panic among ordinary citizens, many of whom are rushing to convert their life savings into gold, silver, or hard currency in a desperate attempt to protect themselves from further losses. The psychological impact of this milestone, crossing 1 million rials per dollar, has been as profound as the economic reality itself. For many Iranians, it symbolizes something breaking beyond repair. For the first time, people are openly discussing whether the rial can survive without an emergency intervention that introduces sweeping monetary and fiscal reforms. The free market exchange rate is the benchmark that most citizens rely on. Even though the Central Bank of Iran maintains an official rate that is significantly stronger, but in daily life, from electronics to imported car parts to basic food staples, it is the free market rate that matters. It reflects what shopkeepers must pay to import goods and what families must pay to survive. In the past weeks, as the rial tumbled rapidly, the sense of instability intensified. Money changers began closing early to avoid losses, shops started rewriting price tags multiple times a day, and many businesses refused to sell goods unless buyers paid immediately in cash or dollars. A senior economist at an Iranian private research center noted that the shock was not only financial but also psychological, as people lost confidence in the state's ability to contain inflation. International reporting quoted a 3-year-old engineer who expressed the public's fear in stark terms. He said life will not only become more difficult for ordinary people, but it will also fuel public concern over whether the government has the resources to maintain and repair the country's aging infrastructure. The remark captures a widespread belief. The crisis is no longer just about prices. It is about whether the state can keep essential systems functioning. As the currency weakens, inflation has accelerated. Food prices have nearly doubled in some regions over the past year. Meat, rice, bread, eggs and vegetables, once affordable for many working families, are now out of reach for millions. With purchasing power evaporating almost daily, parents report cutting back on meals, delaying medical care and postponing school-related expenses for their children. Small businesses, especially shops dependent on imported goods, are also struggling. Many have run out of inventory because they cannot afford replacement shipments. Others have switched to barter-style arrangements or cash-only policies denominated in dollars. The economic squeeze is visible everywhere, from empty storefronts to shrinking crowds in shopping malls. Iran's central bank has attempted to reassure the public, but the gap between official statements and everyday experience has widened. Officials have blamed external pressure, sanctions, and psychological operations for the volatility, but the street reality paints a more urgent and material picture. Although Iran has weathered sanctions for decades, the accumulated pressure combined with domestic economic mismanagement has brought the rial to an inflection point. Following renewed nuclear-related sanctions and regional tensions with Israel and the United States, foreign investment has dried up, oil revenues have been restricted, and access to international banking systems remains deeply constrained. Without a steady source of foreign currency inflows, the economy's ability to support imports has diminished drastically. Iran relies heavily on imported goods, from machinery and technology to wheat and medicine. With fewer dollars available, every sector of the economy has felt the strain. Moreover, structural weaknesses have compounded the crisis. Subsidies consume enormous parts of the state budget, corruption remains a chronic challenge, and decades of underinvestment have weakened electricity grids, transportation networks, and water systems. As economic pressure mounts, fears have grown that basic infrastructure may begin to fail without emergency funding. As the rial fell past 1.2 million per dollar, gold markets across Iran were overwhelmed with crowds. Long lines stretched outside exchange shops in Tehran's Grand Bazaar, where buyers waited sometimes for hours to purchase gold coins or even small silver bars. Families who once considered gold an asset for weddings or long-term savings are now buying it as a survival tool. Jewelers report that many customers come with small bundles of worn banknotes, asking to purchase whatever fraction of a gram they can afford. Even people with modest salaries, teachers, drivers, nurses, have begun converting small portions of their pay into gold each month. Silver, once a low-demand commodity, has become an important alternative. Its lower cost makes it more accessible, especially for younger Iranians or lower-income families who cannot afford substantial amounts of gold. Currency traders say that the demand for dollars has reached its highest peak in years. Some report that customers call repeatedly, asking when new shipments of currency will arrive. Others say they turn people away because supply cannot keep up. Economists warn that this panic buying creates a feedback loop. As more people seek gold and dollars, prices rise further and the rial falls faster. These cycles, once triggered, are difficult to stop without aggressive intervention. Iran's leadership has issued repeated statements urging calm. The central bank has threatened action against unlicensed currency dealers and promised measures to stabilize the market. However, many analysts argue that without increased foreign exchange reserves or sanctions relief, such measures will be limited in effect. The government has also raised the possibility of reforming the currency, including removing zeros from the rial. But experts caution that redenomination without substantive changes to monetary policy would only provide cosmetic relief. The deeper issues of inflation, budget deficits, and declining foreign reserves would remain unresolved. Public trust in government assurances has weakened notably. People recall previous crises in which officials promised stability only for the situation to worsen. With memories of earlier currency crashes still fresh, many Iranians feel compelled to act independently to secure their financial future. In households across Iran, the crisis has reshaped daily routines. A mother in Isfahan described how she now shops for groceries at dawn because prices can rise by evening. A baker in Karaj said he lowers the size of bread loaves every month to keep them affordable. A pharmacist in Shiraz said he cannot restock medications because suppliers demand payment in dollars. Young people who already face high unemployment see diminishing prospects. Many who once considered starting businesses or studying abroad now feel stuck between declining opportunities and rising costs. Families with relatives overseas increasingly ask for dollar remittances, which have become a lifeline. At the same time, social tensions are growing. Economic frustration is evident in public conversations, in online forums, and even in private gatherings. While people express resilience, they also voice fatigue after years of economic stress. Regional tensions add pressure. The currency crisis has unfolded against a backdrop of heightened tensions between Iran and Israel, as well as broader instability across the Middle East. Concerns about potential escalation, whether through proxy conflict or direct confrontation, have weighed heavily on markets. Investors, traders, and ordinary citizens are factoring geopolitical risks into their financial decisions. Some analysts believe that the spectre of conflict increases the urgency with which Iranians seek portable wealth. Gold and silver, unlike bank deposits or property, can be transported quickly in case of emergency. This fear, even if based on worst-case scenarios, has contributed to the surge in demand. Oil remains Iran's most important source of foreign exchange. However, sanctions continue to limit its export capacity. Even though some shipments find buyers in Asia, the payments often face delays or restrictions. With revenue unpredictable, it becomes difficult for the central bank to plan interventions or stabilize the rial. Furthermore, domestic energy consumption has risen, leaving less surplus available for export. Coupled with aging extraction infrastructure, the reliance on oil revenues has become increasingly precarious. Older Iranians compare the current crisis to periods of wartime scarcity in the 1980 seconds. Younger Iranians, meanwhile, see their economic aspirations slipping away. The shared experience of financial pressure across generations underscores how deeply the crisis has embedded itself in society. Even those who once believed they were insulated professionals with savings, retirees with pensions, Business owners with diversified income now find themselves searching for ways to preserve purchasing power. Experts who study Iran's economy outline several possible scenarios, none of them easy. A stabilization path would require fresh foreign exchange inflows, monetary tightening, fiscal restraint, greater transparency in banking and currency markets, and possibly renewed negotiations with international powers. Without such steps, analysts warn of continuing volatility. A prolonged currency slide could undermine the ability to import essential goods, destabilize domestic industries, and elevate poverty levels. Social pressures would likely intensify as well. Economic grievances have historically fueled political and social unrest in Iran, and continued currency instability could spark similar outcomes. As of now, Iranians are watching the markets daily, hoping for signs of recovery. Many refresh exchange rate apps multiple times per hour. Traders listen closely to foreign news broadcasts for updates on sanctions, negotiations, or regional tensions. Families gather to discuss strategies for protecting what remains of their savings. The rial's fall to 1.2 million per dollar has become more than an economic figure. It is a symbol of a nation grappling with uncertainty economically, socially, and geopolitically. As winter approaches, the pressure on households, markets, and policymakers will only intensify. Whether Iran can navigate through this crisis, restore confidence, and chart a path towards stability remains one of the most consequential questions facing the country today.